Hello and happy Thursday, July 23rd. Welcome to another exciting edition of Rate Desk. I'm your host, Michael Thomas, here to talk about multifamily interest rates and other news. Going to the markets today, all three indices ended in the red today. They are down on the session. I sound like the opposite of yesterday when they were in the green. I think the key words right now that I picked up from all the analysts today are bumpy, uneven, uncertain, and just unknown, right? So from one day to the next, the market does tend to swing. Today's news that put folks in a tizzy was regarding unemployment rising a bit and rehiring going a little slower than expected. So we're seeing that impact there. We did see the U.S. 10-year Treasury yield come in a little bit, just about a basis point, trading at 59 basis points or 0.59 today. Good to see the crude oil futures still sticking at the $41 barrel range. That's good to see. And going on over to the multifamily interest rates, continuing to see some tightening there. On the FHA 223F came in a little bit at 233, that is 2.33, fixed for 35 years. And over on the 221D4, that also came in a bit at 2.93, that is fixed for 40 years. Going over to the agency desk, flat today from where they were yesterday, quoting 275 on Fannie Mae, and we're quoting 3% on Freddie Mac. Both of those are 10-year money. And as I promised you, I do have an update on the green energy efficiency for Fannie Mae. Green is back, and they are offering discounts if you can prove at your property that you're going to provide a 30% savings. That combines energy usage as well as water, but you have to have at least half of that or 15% of the savings coming from energy. A very inexpensive audit by an engineer, roughly $3,500, $4,000 or something for them to do an audit and tell you what measures to put into place. Typical things are LED lights, low flow toilets, things of that nature, not typically the high cost items. Those could get you to, believe it or not, as much as a 30 basis point reduction in pricing. That is pretty significant. You get a reduction on the floor of the U.S. 10-year Treasury yield. So as long as that 10-year Treasury yield is low, like it is today, you're going to see that benefit. And then about a 5 to 10 basis point discount on the spreads. So green is back for Fannie Mae, relatively low barrier to entry in terms of cost. Of course, you then have to implement those measures. But again, changing lighting fixtures isn't the most expensive green renovation I've seen in my days. Trust me when I tell you that. Jumping on over to conventional financing for banks, getting some news from the market that, primary markets are still a go. 65 to 70% loan to cost is probably the highest on the leverage chain you're going to see. Key things are very strong sponsorship and, again, the demand in the market and very strong markets. So seeing that out there today, that is all the news I have for you. I do have that exciting episode coming up tomorrow with Jim Tobin, Executive Vice President, Chief Lobbyist of NAHB. Asked some great questions. Jim had some great answers. I'm sure you're going to want to tune into that when that comes out. Come back to Yield Pro TV and check it out. Again, this has been Michael Thomas with another edition of Rate Desk, signing off.